For more on the General Electric spinoff, let's bring in Sheila Kahyaoglu from Jefferies. Sheila, it's great to have you on the show, and we're going to start right there with the fact that GE basically tomorrow breaks into two companies. You got Aerospace, which is really a growth powerhouse, and you have Power, which is actually starting to see signs of recovery and a more meaningful path to greater profitability this year as well. Walk me through the Aerospace piece of this and whether this is a stock that has been trading with momentum that can continue.
Yeah, sure. So we're fans of the aerospace business. We're putting a $155 price target on GE Aerospace with the implied Vernova valuation, meaning GE Aerospace is currently trading at $140. Now, $155 means it's trading at 20 times EBITDA, which may seem steep, but given 70% of GE Aerospace is related to services, which is growing at double-digit pace and higher margins than OE, original aircraft revenue business, we think it warrants this premium, coupled by the fact that Boeing has seen delays. And we could get into what that means for GE services business.
Okay, let's get into what that means, because we know Boeing was the worst performer in the S&P 500 in Q1. It continues to have these issues around safety, around production with the MAX, et cetera. So how does this affect GE?
So the way we come up with our 155 price target for GE is we look at its services portfolio in each of the engines. So we value the narrow body portfolio at about $50 a share. That's primarily driven by the LEAP and the CFM. And that means we're going to see the CFM 56 stay around longer as there's lower deliveries. So think about Boeing. It's missed about 100 aircraft or so. It's on pace to miss about 100 aircraft deliveries in the first 3 to 4 months of the year. That means it adds about 6 points of aftermarket growth on our estimates if you include a 5-point price assumption. So every 100 aircraft miss on deliveries from Boeing and Airbus is a win for GE and the other aircraft engine manufacturer, which tends to be RTX, which is the GTF, but we have a hold on that stock as GE has a dominant position not only on the narrow bodies, but on the wide bodies as well. So the longer OE revenues are delayed, aircrafts are delayed, it means more momentum for the commercial aftermarket.
Okay. Sheila, bear with me here. I got to ask, given what we've seen happen with Boeing and Spirit Aerosystems and the popularity of these spinoffs right now, could it be short-sighted? Do some of these things perhaps belong together, and are companies tempted in this environment to unlock shareholder value in the short term in a way that's actually going to destroy it in the medium to long?
There's so much there to take. What direction? You know, I think Boeing has had supply chain issues, which Larry Culp did a phenomenal job at GE cleaning up over the past few years. So it's about what Boeing's new management team is going to do to reshape those. It seems like vertical integration is key here, with Dave Calhoun on the tape saying they're close to a deal with Spirit. So I don't think you're going to see, I think you're going to see a little bit more vertical integration when it comes to the aerospace supply chain. Now, Boeing does operate 3 segments: commercial aircraft, services, as well as the defense business. The defense business tends to lose money, but can it operate as a standalone? That's been thrown out there as well. So we could see that. Everything's always on the table. Given Boeing's current leverage, we could see potential optionality there in the portfolio there as well. It's not out of the question, but not imminent at the moment, given all the pieces that are going on in the commercial aircraft business. It's probably a lot for one new management team to take on.